the latest. I got to just film the video and explain all the details. I'm going to do it after our stream today. So just talking about Euro NZD, just because it's another important setup we should break down. I was looking at this last night in the Asian session. You're getting a decent looking A1 formation. RSI value is really good. I'm thinking this is going to move to, maybe 2R, 3R. We'll see if the trend wants to continue. It maxed out ADR, doubled ADR yesterday to the downside. So I was just going to see if that trend was going to continue. But I was very aware that there's bullish divergence present. So if you go to the RSI low right here and match it to the price action low here of the Asian session, you can see price is falling, RSI is rising, and that's normally a sign that change is coming, right? Change is coming. So when you're trading towards that divergence, just know it might bounce and come off that line. I knew that going into my Euro AUD trade yesterday. So it could have done the same thing here where it broke through like my trade did as well. Here it ends up holding, I think because you maxed out ADR, you doubled ADR. So it was very overextended, so to speak. It breaks the 50, right? We talk about this. Break of the 50 once. That's normally a sign bias is changing. Breaks back above the 50 second time. More confirmation bias is changing. Sets the higher low off the bottom here. So now we're rising. And then when it comes through the 50 here, that's where you would anticipate the move up to the 200 at least. So seeing this move overnight, through the London session and then now into the New York session, seeing it move higher makes sense because of the divergence and because of the multiple 50 EMA breaks. This looks like a D2 where you get break, test, second breakthrough, third breakthrough with the L50 pulling up into the buy zone. And that's where I would look to go long, something like this. Off that 50, I wanted to then hold the most recent higher low off the divergent bottom. Remember, the divergence is back here, so I'd put the stop right here, and I would measure risk reward to the 200. It's only 1.2R, so it's not great. But you could say, look, if we bodied the 200, we could move to the 800, go ADR, that's 2.5R. That's a lot better. So that's where you could generate the long idea here, just using structure as your stop loss. And then anticipate, because the 8 and 21 are crossed up, you would want the 8 to hold above the 21. That's it.